to look more at the advantages of digitalization in the banking sector. I have the head research FSDH Merchant Bank, Ayo Akinwumi. He joins me now via Skype. Glad to have you join us this Friday, Mr. Ayo.
Thank you very much for having me. Good afternoon.
And I must commend your cap again, like I said earlier.
Thank you very much. We are trying to employ local content.
Yes, exactly. Make in Nigeria. That is what we've been looking at, that campaign. Now, let's start this way. Before we go into digitalization, I really want to just throw this to you. The Fitch rating saying that this 13.5%, that's the drop in the MPC at the last meeting, will not really trigger growth. I don't know what you make of this.
Yeah, if you look at the reduction in the MPR that the Central Bank did, announced in the last meeting, it has helped the federal government to save a lot of money in interest expenses. Yield on federal government treasury bill had dropped from about 17% to about 14% region now. So it has saved over 9 billion naira in interest expenses between then and now. But in terms of spurring growth, stimulating growth, credit creation in the economy, it's not only interest rates, drop in interest rates that does that. The economy is still very fragile. People have, banks are looking at if we lend, what's the possibility of getting our money back? So there seems to be a little bit of a risk aversion by banks. So it's not just dropping rates that stimulate credit creation in the economy.
Well, Mr. Ayo, the banks are still investing so much in treasury bills at the moment because of the attractive rates, despite this fall you talked about. What would you say is responsible for this?
Well, again, one of the things that I mentioned, there are few quality risk assets in the country. A number of people banks are looking at the entire space and growing their risk asset gradually and with a little bit of a caution. However, one of the things that you also note is that even at 14.5% yield on treasury bill, these investments don't pay tax. So if you look at the tax adjusted return, when you invest in that, is far higher than where it is. Number two is the fact that if you look at the fact that they don't even have provision, they don't make provision for them. If you lend money to any sector, either the loan is performing or not, there are some statutory provisions that a bank may be required to make, but that's not the case with this. But as the economy continues to improve, as government continues to invest on the economy to ensure that they de-risk the economy to a large extent, and then business opportunities begin to spring up, and then banks will lend also to support businesses.
Mr. Ayo, staying with the banks now, digitalization is kind of taking over now. That's the way to go. We all have our banks on our phones, on our mobile phones, and we can do whatever we want to do. What do you make of this? Yes, there are threats associated with this, but the positives, reducing operational costs, making banking easier for everybody. What do you make of all of this?
I think it's a good development. The financial industry is leveraging on the technology to bring more people into the banking, to the financial market, and to make them have access to financial products. And it is also in line with the strategic objective of the federal government and the Central Bank of Nigeria in the area of financial inclusion, bringing more people into the financial services to ensure that they have access to credit, to have access to banking services, to improve their well-being and to grow their businesses in terms of having access to credit also, because if you don't have banking experience, if you don't have a banking relationship, you may not be able to access loans from the banking industry. Again, from the angle of the customers, it's also giving them convenience. So, like you said, very correct, just on your phone, you can then transact business, you can transfer money to other people, and it gives the recipient immediate value for the money. On your computer, you can do that. So you can do that. So it makes it easy for them. For banks also, it gives them access to wider customers to place money with them access to wider clients to serve, and they bring in more people to the financial industry, and also help to reduce their operating expenses, like you mentioned. Is yes, a lot of investment needs to go into that technology and to make it secured and safe. However, in the long run, it's still cheaper than the bricks and mortars that the banks will that we develop across the country to ensure that they get more people. So I think it's win-win from both sides.
Now, let's dwell a little on the challenges that we see in all of this. People taking advantage of this initiative, getting to, swindle and, get people's money off their accounts without their knowledge. Yes, I know you might not be an IT expert, but how secured would you say our banks are to continue to run all of these processes?
I think I would say, without any, I work in a bank, I can say it, and I also am a user of these products.
Great.
It's secure. Yes, there is no process in the world that does not have any, problem. But then the central bank and the banks are investing a lot of money in infrastructure, in security, to ensure that the system is safe for everybody, and then people have confidence in it. If there is any case of fraud or whatever it is, the banks will store the customer immediately. So they are investing a lot of money. They are investing a lot of money on security, investing a lot of money on infrastructure to ensure that the experience that customers have is good. And then the central bank also, from the regulatory perspective, they have also developed a lot of systems and a lot of capacity to ensure that they monitor the process. So, and all the operators, the banks, the financial technology, the technology company experts, human resources, capacity building, infrastructure. So everybody is investing a lot of money because this is the way to go. That's the future of the banking, and it's better for everyone. So I think for me, it's a secure channel. It's good. It's improving. It's getting better day by day.
All right, Mr. Ayo, just one more question on this before I move, because we still have to talk about the central bank's injection. Will this not lead to job losses in the banking system after some time? Many say robots will take over some banking jobs. What do you make of this? Briefly, so we'll move ahead.
The truth is that the new skills are being developed. Yes, some people, because of the fact that this is faster and it's more efficient, people, what about 5 people can do, maybe 4 or 3 people will do it. But what we must also understand is that it is human being that will still drive the process. So a lot of people will have to reskill, learn new things, and to make themselves relevant.
All right, Mr. Ayo, let's move to the other. Now, Central Bank has injected $210 million to sustain liquidity in the interbank market. The wholesale segment of the market received 100 million, while those in the small, medium enterprise also got. Now, this injection has been going on for some time, and many have been arguing about how the central bank will sustain this. In your view, what do you make of this continuous injection into the foreign exchange market?
And the main objective is to maintain price stability from the exchange rate level. The external reserve today is over close to $45 billion, which, according to the central bank, is enough to cover more than 13 months of import, which means that in the short term, as long as oil price at the current level, they will be able to have enough foreign exchange to meet all their new, users. So for me, the major issue we should be thinking about is what happens, at least the way we are structured as a country, what is happening in oil markets in terms of oil production and oil price. As long as we have oil price at over $70 per barrel as we have today, I think the last time from Burning Lightning is about $75 per barrel. As long as we have at this region, we think the central bank will continue to have, enough resources to continue to meet that intervention. But here, personally, I believe we need to diversify the sources of foreign exchange earnings into Nigeria so that we don't just depend on oil price. The current rally in the oil market may not be sustainable because it's not really backed up by strong global demand for oil. You look at the report from IMF, World Bank, the global economy is not expected to grow as much as it was previously. And then even oil price this year is not expected to grow as much as it was last year. But demand will develop Nigerian economy to ensure that we have non-oil exports earnings. The better will be our ability to ensure that we have more foreign exchange earnings in Nigeria to support the current exchange rate that we have.
Mr. On the final note now, I love that diversifying sources of forex very importantly there. Yes, reserves becoming very, very solid, talking about more than $40 billion at the moment. But Mr. Ayo, we still have disparity in rates. We still have different rates. Rates for petroleum imports, rates for pigment, different rates. When are we going to have is it going to happen anytime soon? Single exchange rate for all, or whatever we want to source it for?
The simple answer is that I do not know if it will happen soon, but I think it should happen soon. There is a need for us to harmonize the various exchange rates that we have in Nigeria, but it cannot be done in isolation. If the federal government does not agree to subsidy removal on premium motor spirit petrol, then it may be impossible for us to have a uniform exchange rate. So the federal government, the central bank needs to come together and engage the entire population, the country, to address how we are going to deal with the critical issues in the country, and then before the central bank can then go ahead to adjust and to remove the multiple exchange rate we have in Nigeria today. My view is it should happen, but whether it's going to happen, I can't answer. I do not know.
I feel you, Mr. Ayo. Thank you very much, Ayo Hakiwumi. Thank you very much spending your Friday afternoon with us. Enjoy your weekend.